I will keep it under 15 minutes. I will keep it under 15 minutes. I will. Oh, hey, what's up, everybody? This is Jimmy with Trading Decoded. It is 4:13 in the afternoon, July 17th, 2024. And today, well, the trading day was a slow bleeder for the most part. We had a nice move overnight. Unfortunately, when we can't do anything about it unless you hold options overnight, which is a big no-no for me. And, well, we opened up with a nice gap above us, a gap that never got filled because we made a short attempt to run up, not quite making it there. And then we came down, sideways, down, sideways, down, sideways situation. Volume after lunch completely died as usual. And so once again, we're not going to talk about the second half of the day. It did start to pick up a little bit. Qs got stuck in a range that was tradable, but again, between theta and all of the sporadicness and lack of volume, I don't feel comfortable doing it, so I don't recommend other people do it. Simple as that. But without further ado, let's go ahead and launch the charts and see what we were able to find this morning. And I'm going to explain something to you that's very important to me because this is a rule that I follow without ever bending. And I want to say ever as if it's 100%, but 99.9% of the time, the rule that kept me out of the first trade of the day that we were considering is a rule that I very, very, very seldom deviate from. And I'll tell you what that is in just a second. As you can see, we closed in after hours all the way up here yesterday and opened this morning. Well, not opened, but pre-market opened all the way here and fell straight down to here in the morning, early morning session. And then we dropped down into a tighter range at the bottom of all of that when I do my charting, which is around 8:30 in the morning. Okay, so at that time, we found our pre-market mid-high and low lines, 558.79 and 559.30 and 559.93, respectively. I mean, we kind of bounced between those zones until we didn't. Now, call put scenario is something we do every single day. You guys watch my videos, you know exactly what I'm talking about, so I'm not going to spend a whole lot of time talking about them again today. But there is one caveat today that is important to take note of. Number one, normally, if there is price action in pre-market above our call or below our put line, we typically will aggressively enter that trade with a breach of the line as the entry purpose for that trade. This morning was different. We had a big move down. The entire top 10 was very red leading into the open, okay? I don't like to be aggressive on calls or puts for that matter when you've got such an extreme happen overnight, okay? So the caveat today was we want to wait for candle closes above the call line if we are going to take the calls and a candle close below the put line. The put line is here on our pre-market low. The call line was up here on our pre-market high. Easy peasy. What we were hoping for, if the call scenario was to work, is a move up to 560.97, where it had been rejecting prior, or if anything, here. Okay, this is another level of resistance. It is the first resistance above the blue line, so we'd be hoping that it makes it to 560.64, which it almost did on its second attempt. But the reason there is an arrow here is because that's where the call scenario was. Where you would stop out of this trade, they are aggressive trade, guys. You got to treat your stops aggressively as well. You don't want to hold on to these call put scenarios for any length of time if they don't work immediately, meaning there's not enough going on in the market yet to confirm direction, to develop a good trend. Okay, it's just, they're super risky, but they work often. So a lot of people like to trade them, including myself. But here's the one rule I was talking about just a few minutes ago at the beginning of this video that I do not deviate from 99.9% of the time. And it's the reason, and I said this before I got into this trade about 3 minutes prior to getting into the trade. I said, if we close above that line and the Qs haven't taken out their downtrend, I'm not buying calls. I refuse to trade against the Qs. Let me repeat that. I do not trade against the Qs. The Qs hold significant value to me when it comes to trading SPY. Because if the Qs are moving down, especially aggressively, the SPY move to the upside, should it be happening, is not going to last for very long. Okay? The reason that this happened, the reason it went up, which I was totally okay with, I could see it, was because of this right here. The aggressiveness of small caps being bought up. They were stronger than the Qs were heavier. Okay? So yes, I can recognize that SPY was going up. Where's my Qs? But Qs were going down. Okay? So you got SPY going up because ADD was stronger than the Qs. I do not feel comfortable trading against the Qs. You will not find an instance where SPY is going in the opposite direction of Qs and I am playing against what the Qs are doing. You will find, however, if the Qs are going down and SPY appears to be on an uptrend, I will take counter trend trades because of the Qs. I always want to trade in the direction of the Qs with very, very few, seldom times that I would do otherwise. Okay? ADD to me is confirmation to stay into a trade that I'm already in longer, or as extra confirmation to get into a trade that I'm considering taking. Never do I use ADD for any reason to get into a trade all by itself. Okay? In this case, if I'd done that, I would have made good money. But the Qs were going the wrong way. And I don't trade against the Qs. Okay? But because of that, I had more tendencies to want to play to the downside. I just needed a good reason to do it. For me, that reason was not being able to maintain a level of support at this line of resistance. In fact, we closed below it at 936. I am well aware that the ADD was still going up. Remember what I just told you. This is less of a concern for me than this right here. The Qs hadn't even yet taken out their most recent higher low that they made in pre-market. Okay, this is still a downtrend on the Qs. Okay, I don't know how else. I would not play calls on SPY today unless this line got taken out. Period. Okay. Now, I said that before we crossed the call line by minutes. So for those of you who chose to take the call scenario, you know as well as I do, I skipped yesterday's call scenario and it ended up paying big. If I'm not mistaken, it was yesterday. I don't remember. But because I didn't feel comfortable doing it, right? The people in our community know that their trades are their trades. I provide all that I can with the knowledge that I have about what is likely to happen in certain events. That also means when I say there's a call line and a put line, I tell my people if I'm getting into those trades or not before they get there. I told them this time, I'm not taking this trade because the Qs are going the wrong way. So if you took it, knowing where to get out because it didn't work this time is important. Should have been a small loss. You would have got out because we broke back below the line that got you in the first place. Okay? You had ADD on your side. You had SPY moving up. We broke a resistance with a candle close. You didn't do anything wrong other than ignoring the fact that the Qs were still trending down. But that's my personal rules. So that's why I didn't take the trade. Now, as stated, I did get in, and I announced this as well, the opportunity, not looking for a huge move, but to go from line to line. Now, when we got down to this line, I was pretty excited. I was up good money, but I wanted to hold longer. because around this time, if I'm not mistaken, we were starting to see ADD start to move down. Yeah, so ADD was taking a breather while the Qs were still trending down. For me, that means hold a little longer. Now, while we were in this trade, on this line of support, what starts to show up here under this candle as this is printing? We started to see flashes of the good old Decoded arrow here. Okay, now, at that moment, I was still in this trade. I put a mechanical stop loss in. What is this arrow telling me? It doesn't tell me buy calls here, although in this case it would have worked, but I'm already in puts, and I want this to continue to go down because the momentum is still on my side. When that green arrow starts to show up, that is telling you not that the move is definitely over, but that the momentum that carried that move down there is at risk of being weaker. Why? Because in order for that green arrow to show up in the first place, even though it doesn't have to print there, but the minute it starts flashing, every time it flashes, it's telling me something. And you know what that something is? It's telling me that Qs, ADD, NVIDIA, SPY on the 1 minute and SPY on the 5 minute at that exact moment are all green. Now, if I'm in puts and all of the things that get me into my trades are going in the opposite direction, I'm going to consider maybe getting out of that trade while it's still profitable, right? So when we start to see that show up, I say something exactly like this. Guys, the Decoded is starting to flash, which would indicate that the weakness or the strength of this move is getting weaker potentially. You don't have to get out, but I would recommend that you put a mechanical stop in somewhere near where we're at in case that weakness becomes weak enough for the buyers to take us off this support. The very next candle, the buyers stepped in, we printed the green arrow, and up we went. Not a huge, it wasn't like a reversal, massive run up after that, but it got you out of a winning trade early enough to keep it a winning trade. So I got stopped out of this trade on this candle here, but we were warned about the potential of this move temporarily, if anything, being over a minute before we got stopped out. Some people got out when they saw it immediately. Awesome for you. Some folks held on and got stopped out. Awesome for you. Some folks didn't stop out at all and ended up taking a loss on the trade. I'm sorry for you. Some held and hoped and got rewarded for that too. So we got different walks of life. People do different things for different reasons, but I want to explain to you guys how I use that indicator when I'm already in a trade. Okay, it's very rare that I use it itself to get into trades because I'm watching all of those charts that thing is telling me in real time. So I don't really look at the indicator for my entries. I'm looking at the price action of the Qs, ADD, and NVIDIA in real time. With that said, that was my first trade of the day. That ended up being about 16.6% when I got stopped out, which is fine with me. I mean, that was a good trade. Our stop loss in this was a close above this double top right here. Okay. Again, once we got in, we announced that. I know people have questions. Jimmy, where are we going to stop out if this doesn't work? Guys, just look left. Find the reasonable resistance that would save you should we get moving to the upside, knowing that if we don't stop there where the seller stopped it before, it's likely to continue up past through that to the next resistance. That's it. Okay, so that's your stop loss. Now, we talk about all the time. Do we use mechanical stops? Do we use mental stops? That is always going to be determined by the trader themselves. If you lack the discipline to stop yourself out mentally, you have no business using mental stops. Okay? I will tell you exactly what happens to me when I have a temporary lapse in judgment and I decide to be cute and say, hey, I know my stops here. Let me see if we close above it, if I could just hang on and then let it come back down. It's moving slow. It's looking pretty strong to the downside. Let me just hang on to it a little longer. You know what I'm telling myself? Jimmy, you done effed up Aaron, and now you're holding hoping. 100% of the time, if I don't stop myself out where I originally planned to, that trade is 100% going to turn into a hold and hope. And that means it's going to be zero or hero. There is no middle ground once you've hit that spot, folks. Please know that about yourself. So if you find yourself doing that all the time, use mechanical stops. You owe it to yourself to protect your money. You owe it to your money to do that and your confidence. Okay? Because if you do that too many times, you won't have any money and it won't matter. But that's what happens to me. That's why I have the discipline and really try really, really hard to obey my mental stops, because if I don't, I know what happens to me. It's not good. Oftentimes you get rewarded for holding and hoping, but trust me, it's not a winning strategy in the end. Okay? Because when you hold and hope too long and it goes too far against you, guess what you do next? You average down. Yeah, you throw even more good money at a horrible decision. Right? Hoping that makes it better. It's no different than throwing your money into a fire. Sometimes it works. Sometimes you can reach back into that fire and get a couple of bills out that are still usable. But most times you're going to burn the shit out of yourself. Okay? Just, it's not a good thing. Anyway, we do move up. We never made it up to our line of resistance here. We came close to the one that we put in over here, but didn't even get to touch that. Okay? So again, calls were off the table to me because of this. This is a very much no call day for me personally. Now, what's next? Well, we recognized how strong this pre-market midline was holding as support. Okay. Now, as we are coming down to it, we had some folks like over here got back into puts because we closed below this support. Off of a lower high. Qs were doing the same thing at the same time. Close below support, lower high. This was a great entry. A little too aggressive for me, considering we were still moving up. We hadn't yet, I guess we did at this point, finally broke this trend with this candle. Okay. And then it made a straight beeline down to the next support. This support had 100% chance of holding until it doesn't. Guys, you don't know until it tells us otherwise. So I always try and get people to consider this. If you want to buy puts up here, that's fine. If you're considering buying puts down here, just look left and say to yourself, I want to buy puts where there's been a 0% chance of success that they've worked so far. I look at that and I try to apply logic in my simple little brain here and say, yeah, it's a little too risky. It might work, but based on the odds of what I've seen with my own eyes, it's less likely to work. Now, in this case, it did work. Okay. But, if you're constantly doing damage to yourself through trading mistakes, start to go with the probabilities, less with the feelings. Okay. You're not going to win them all, but it'll keep you out of a lot of trades that don't end up working. I'm telling you. All right. Now, what we wanted was a close below our put line. Finally got that just a couple minutes after we eventually broke through pre-market mid. Qs at this time at 10:06 were plowing through support levels as well. We had just closed here and we had enough room to go down from here. A lot of people bought the pullback on the Qs, looking for that continuation to go down. Whether you got in or not, the put line was the second and final trade for me. And once again, in this trade, the Jimdicator started flashing again. And we referenced the first time. Guys, remember what happened the last time we were in puts and that arrow started to flash. I'm not suggesting you should buy calls here unless you're counter trend trading. If you're doing that, please just wait for a break of the trend line to have a little bit more of a chance. Or you put your man grapes on and give it a go. Not my cup of tea, but once you see the weakness of this move start to show up even a little bit, it's worth considering taking profits. Definitely worth considering putting a stop loss in place and taking advantage of the move that you got nice and clean. Not a home run unless you got in up here. But this right here, from here down to here, was still a 26% win. Still good money. Okay? 26% on your money in 4.5 minutes ain't bad. It ain't bad. Now, that was my second and final trade of the day. We found a couple of more. This one was a little bit more of a squeaker. We were talking about some trading related psychology during a lot of this stuff today, because today was a difficult time for several people. I am well aware that people have a big bias when they open up their trading platforms and they see a big drop overnight. They see a bunch of red in the top 10. Trust me, I get it. I used to be that guy. I've also seen the biggest recoveries I've ever seen in a single day take place after a move, a massive move in pre-market to the downside. Some of our members can remember to the day, the actual date that we saw a $19 recovery straight up after a move, a massive move down. So I don't play that game anymore. Oh, look at this big thing that I missed. It's got more to the downside. In this case, it did have more to the downside. It was just a slow grind. Today's chart really sucked. It really sucked. And I know I was going to try and keep this at 15 minutes. And I know I'm at 21 minutes right now. I'm sorry. We're going to get through the rest of this just now real quick. Jim Decoded saved us here. We were able to maximize that trade. Yes, if you stayed in, you could have squeezed a couple more percentages out of it, only to get smacked in the face, ran back up to what was a good support, turned into a good resistance. And now this one here, this was just a quick trade. We were talking about channels. Qs, if I'm not mistaken, at this point was in a channel. Let's see, 1103. Yes, Qs were in a channel here. We were looking to go from here back down to this support. Again, it's about a 40-cent move, not a huge move, but it pays. It pays usually 8 to 16%. Eight, actually more than that. Usually pays 20 to 25% on a 40-cent move. But long story short was, guys, you have a good resistance here. If you can get in up here, you have a nice tight stop. We're hoping to get down to support. If we do, you take your profits. If you want to hold longer, that's fine. Move your stops down, trail it. If it breaks lower, you make out like a bandit. If it doesn't, you stop out with profit. Either way, it was the last trade that we talked about at the time. But I just wanted to show people that you can scalp. If you've got a good downtrending day, I'd prefer that you're buying puts at resistance than calls off support, just momentum. And then that was that. So there was nothing else that we talked about regarding trades, because shortly after this, obviously we chopped around a bit. It was very sporadic, all over the place, low volume, just junk. And then I went to lunch. So I was gone from 12 o'clock, 12:15 till 1:15, somewhere over here. Came back after this nice drop to the downside, which, by the way, ultimately got through the support and eventually down to this point here. And then we didn't do much anything after that. So we had a lot of discussions today about the psychological side of trading and life and everything that goes into it, and how we can become better as traders through making changes in our day-to-day lives. All right. So with that, we're going to wrap it up. Hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, there's a link down below. We'd love to have you. And we're going to wrap it up. So hope you all had a fantastic day. Till tomorrow, I love you guys. See you.